Yo, welcome to July 24th, 2024 live stream. Let's get right into it. Let me get my chat opened up and yeah. Alright, so coming into the morning, I wanted to note out that NQ has completed its weekly objective here. So like I said, I was wondering if we could create a an open high low close candle on the weekly time frame, because like I said, in the market weekly market outlook, I wanted to see us take out weekly low, and now once we take out weekly low, let's see what we should do here. But like I said, weekly low was our objective, and I did put out this announcement here in my Discord yesterday, where I was anticipating for us here on NQ, we priced higher during Mondays and Tuesdays price action, and however, that was just the weekly manipulation if you think it in terms of weekly power of 3. So the week, you can anticipate it to be an open high low close candle. So open high low close, because like I said, we are anticipating for us to take out weekly low, right? And we priced higher during Mondays and Tuesdays action, so I believe that this was just a manipulation move here to actually go lower. And now once we have taken out previous week's low, I am in a state where I will be trading intraday action, and like tomorrow, let's say we displaced here today, right? Coming into tomorrow, I would like to attack previous day low if we get a bearish closure. But there's the morning opening bell there just now. Yeah. Interesting start to the morning, to be honest. Us taking out previous week's low is pretty crucial. So I do want to go refer back to what I have stated during the in the market outlook, the weekly market outlook. But yeah, everything here that occurred on NQ was anticipated on the market intraday or intra-week analysis. Yeah, we could have possibly created the high of the week on Tuesday, and I would like to see us distribute lower, attacking Monday's low of day and previous week's low of day, or previous week's low coming into tomorrow. Notice how we also have red folder news, so it's aligned. We have news in alignment with what we want to see on NQ. The one thing is that ES actually hasn't taken out its previous week's low yet, so if we could I still, like I said, am anticipating for us to take out previous week's low on ES, because we can still continue lower on ES. That just proves or that gives me more inclination to even to take like continuation on NQ. We could take out June 12th low here, rebalance another daily fair value gap. June 12th low is basically this fair value gap's high right here, this daily fair value gap. So if we disrespect this daily fair value gap that we're within right now, then I would like to attack and rebalance this daily fair value gap. But yeah, it's a lot of if-then statements. Here we have a 30-minute fair value gap that we're trading within. Yeah, just note that. And let's chat, shall we? Alright, so yeah, we have that 30-minute fair value gap here that we are trading within as of the moment. I don't trade the first 30 minutes. It's just not where I want to trade, and not how I really trade. Is I avoid the first 30 minutes because it's volatile, and it is one of my rules that I just don't do. Because if you pay attention to what's happening on YM right now, we are going higher, and look at what ES and NQ are doing. We're continuing lower. NQ just made new low of day. Just keep that in mind. ES hasn't taken out its respective low yet, so we'll see what happens here. But like I said, ES hasn't taken out its weekly low yet, and I do believe that ES will take out that weekly low. Yeah. So there's that morning opening. We retrace back inside that 30-minute fair value gap again, and then reprice lower. ES just now caught up and is about to take. So ES just took out previous week's low, which is, like I said, to be anticipated. I was anticipating that all week, but the move happened during Asian session and London session, which I don't trade those sessions, but I do want to note out how look at how prices treats the weekly open. It's like almost support, right? Or not support, resistance. You always want to be buying above, or you always want to be selling above the open. And like I said, since this is a weekly objective, right, we still haven't taken out previous week's low yet, so prices is going to refer back to that weekly open and sell off from there. So this is how I'm interpreting this price action right now, is prices are accumulating positions here above the weekly open because they want to sell in basically premium in the open of the candle, the weekly open. So that's something that I do want to note out, is that but yeah, look, so now that we've displaced we traded into that 30-minute fair value gap, and now we're trading away from it. We're pricing lower. So on ES, like I said, I'm actually wanting to see lower prices on ES, and I want to see us take out that original consolidation. So complete the market maker sell model here, which is also in once we take out that low. If we take out that low, I could see us retrace into the discount of this dealing range here, this weekly dealing range. So it looks like we are disrespecting this daily fair value gap as of right now. Like I said, the next draw on liquidity here would be the June 12th low, which is also a daily fair value gap high. So I want to see us rebalance that, and let's see if we can catch any moves here coming into the New York AM session. I didn't take any trades yesterday at all. I didn't have any setups for me that really aligned with my I didn't have any setups, to be honest, and I'm starting to like really grasp the idea of like really A+ setups, only taking A+ setups. Like, I need a higher time frame draw. Like I said, I know where the higher time frame is going right now because I've done my analysis already. Like I said, on ES, I want to see us continue lower. to take out basically the original consolidation low, and in turn that means I want to see us also do continuation follow up with that on NQ. And you see why I don't trade the first 30 minutes here. Look at what's happening on YM. YM is literally shooting up higher, and look at NQ and ES. They're moving the complete opposite of what YM is going, where YM is going in. Dixie actually is a little bit interesting because I was anticipating for us to rebalance this daily fair value gap here. I was anticipating for us to rebalance that, but it turns out that we have, if you consider that this is the daily fair value gap, because there's imbalances here and you want to include the imbalances inside the daily fair value gap as well. So there's that. Sorry, that was supposed to be the New York Open, but I snoozed my alarm, so it played twice. And it looks like June 12th is gonna be the draw liquidity here, which is pretty nice to see. So we have standard deviations that align with that actually too. So let's see if this -4 standard deviation aligns. It gets taken out, this one right here, and this standard deviation is also, this -2.5 is aligning with June 12th's low. But yeah, today should be a pretty good trading day if there's setups that present itself, but we can only tell. Okay, so dollar actually just took out its low here, July 22nd's low of day, which is basically Monday's low, and now we're rebalancing inside this 10-hour FEG again. Like I said, I still wanted to see us take out July 12th's high of day and daily fair value gap low, so we can see what we do from here. But like I said, I wanted to see us take this out. But if not, then it's cool. And if we completely disrespect this 10-hour FEG now and continue lower, what should we be seeing on indices if the dollar is going lower? We should be seeing higher prices on NQ and ES, but that's not the case. So I'm gonna elect to wait for the 10 o'clock open and see what we do from there, because like I said, I don't want to trade the first 30 minutes of the day. It's just not how I trade, and I would rather just be watching prices and not really chasing anything. While we do watch prices though, let's go take a look at what my improvements what I can improve on this week. So things I can improve on this week is I'm going to follow my risk management plan and review which risk management plan I will follow every day on stream. I'm going to do that right after this. And when I take a 15-minute power of 3, I must know why do we create that power of 3. I'm not going to just just take it like that, take it based solely on the 15-minute power of 3. This is going to limit the amount of trades I take, but the trades that I will take will be more will be higher in quality. The third one is I can only trade a power of 3 model without knowing the why if it is aligned with another time frame. So a model that is based on the 15-minute power of 3 and the 30-minute and an hourly power of 3, I will take without necessarily knowing the why. And for this I already done, so I can mark that out. So coming into today, the risk management plan that I would like to select to use here is the normal position size. I'm not going to be trading de-risk or anything like that. There's no reason to. So if I were to take a trade today, and it's my first trade of the day, I would be risking $480 as my maximum stop loss if the risk to reward is a 1-to-1. But if it's if it's a 1 to 1.5 risk to reward or higher, then I'll be risking $720 if it's my first trade of the day. So there's two scenarios that could play out for my first trade. Either it's a 1-to-1 risk to reward or a 1 to 1.5 or higher risk to reward. The second trade of the day is if I win the first trade, I'm going to risk half of my profits from my first trade. So let's say I make 500 my first trade, right? My second trade, I'll only be risking 250 of that, and yeah. But let's say I lose my first trade, right? I would only take my second trade, I would risk $240 as my if my risk to reward is a 1-to-1. But if it's a 1 to 1.5 or higher, then I'll risk $320. My third trade, so if I do win my second trade, right? So I'm 2 for 2 for that day, and I make, let's say, 300 on my second trade. My third trade, I'll risk half of that, which is 150. But if I lose my second trade, $120 will be my maximum stop loss if my risk to reward is a 1-to-1. But if it's a 1 to 1.5 or higher risk to reward, then 160 is my maximum stop loss. So you guys can take a look at what the numbers are and everything, but that's that for me. My second point is I cannot take any models that is below a 1-to-1 risk to reward ratio. And my risk to reward should be set to where I take my first partial break even. Basically that means where I think how far, let's say my terminus is previous day low, right? But I'm taking my trade based on the 15-minute power of 3. I'll be taking partials at that 15-minute low, so that would be where my risk to reward would be set up at, where I take my first partial. And when I do take a partial, I'm going to take off half of the position size, and I'm going to move my stops to break even. So an example is if I have an original position size of 20, right, and my partial gets hit, I'll take off 10 for my first partial, and then I'm going to move my stop loss to break even, and then I'm going to move set up new target, like new TPs, and I'll take off another 5 if that next TP gets taken. And with that, that's going to be all for the risk management part of the live stream. So like I said, yeah, I'll be trading normally today. There's no reason to de-risk, so I'll be doing that. Oh wow, look at that. ES actually retraced back inside that 5-minute fair value gap and then took out that 15-minute low. There, I would have moved my stops to break even there. Yeah, it would have been something like that, and then move stops to break even now, and then I can target that new week opening gap, -4 standard deviation, and that original consolidation there. Here's NQ. So let's see what the 4-hour looks like right now. So if we were to close on this 4-hour candle right now, right, I would anticipate for us to take out this 4-hour low. Moving to the 1-hour time frame, on this hourly time frame, I would anticipate for us to take out this hourly low as well, if we were to close exactly right now, and leave this hourly fair value gap that we would create if we closed to be a breakaway gap. So treat that hourly fair value gap as a breakaway gap, and this 30-minute fair value gap, or 30-minute objective as well, is to take out that 30-minute low and leave this high intact. So 4-hour, 1-hour, and 30-minute are in line. Let's see what the 8-hour has. So if we were to close on this 8-hour time frame as of right now, I would consider it, I would target this 8-hour low, leave this 8-hour fair value gap to be a breakaway gap, and attack that 8-hour low. So I don't expect us to retrace all the way back inside that 8-hour FEG and then take out that low. I'd like to see us take out the low first, then see where we go from there. But the higher time frame, like I said, we still have that draw of liquidity, which is June 12th's low of day. So we'll see what we do from there. But like I said, that is the higher time frame draw as of right now for me. I can set up standard deviations, which I already do have, like -2 standard deviation, and if we do end up taking a trade, then we'll see from there. But let's say we do create this 15-minute fair value gap, right? The first thing I would do is see if I can take a trade based off of that right there, straight into that 15-minute fair value gap, and to attack June 12th's low. But let's see what the risk parameters are. 90 points if I were to do that right now, and if my full terminus is this low, that just makes no sense. Let's see what it would look like on the 5-minute at least. So let's say I set my stop loss to the 5-minute open price. Still 777. How many? Let's say I'm risking 480, right? How many contracts would I have to risk there? 3 contracts. Is that something I want to risk? Not necessarily. Not 3 contracts. The risk is a little bit high, but like I said, that would be my draw, is June 12th's low. I would want to see us create a 15-minute fair value gap here, trade into it, displace away from it, and then if we can get an entry, retrace back into a lower time frame FEG, and then continue lower. But like I said, if the markets doesn't give us that, then it doesn't give us that. The reason why I just drew up standard deviations there is or not standard deviations, premium discount, is how far can prices retrace to get into premium of this range. Is that 0.5 here, so it actually aligns with the 5-minute and 1-minute FAG. So if we do get a retracement into that discount of this range here, then I'll actually consider taking an entry like this. Where is that 15-minute open? There it is, right there. And then I'll be targeting, you know, like I said, that 4-hour and 8-hour low, and full terminus would be at June 12th low. But that's if prices retraces all the way back into here. I don't see us doing that, but like I said, we could, and that's also discount of the range, or premium of the range, sorry. So you want to be selling in premium. Like I said, whenever you sell to a seller, right? Let's say you're whenever you're selling to a buyer, at what price do you want to sell it to your buyer? Would you want to sell it for him at $10 or $20? You always want to sell more, right? You want to sell them to make more profit. So think of that as the same thing here as premium and discount of the range. This is actually a higher price, so prices is gonna wanna reprice up to here and then continue lower if and treat this area. You have to be really sensitive here at that premium of the range. So I'm gonna set up OTE of that, and I will see if prices can retrace back into there. So like I said, I would set up an entry something like that to target the that low right there. That low, this low right here would be the 4-hour low, 4-hour, 8-hour, 30-minute low. And like I said, I want to treat this hourly fair value gap here as a breakaway gap. So with all of those confluences in mind, I would actually here now, like I said, consider taking an entry and see if prices can even retrace back into there. So if I were to risk 480, right, let's see how many contracts I can risk. 4 micros. That's crazy. How much would 1 mini be? Or 4 minis? That's absurd. So it looks like we might actually not get an entry here to target June 12th low of day. We'll see if we can even, you know, retrace back inside this 15-minute fair value gap. That is, we still have about 3 minutes left, so I'm not going to be too hasteful, but yeah, that's just something that to keep in mind. So let's see if we can get a retracement into that discount of this range, or premium. Sorry, I don't know why I keep saying discount, but I want to see us retrace into a premium of that range. If we can't, then we could actually just treat this 15-minute fair value gap as a breakaway gap, just depending on how this 30 minutes going to close, or this 15 minutes going to close here. So I'm going to be a little bit nimble. I'm going to be nimble and watch what prices could give us. So we might actually just retrace into this 30-minute fair value gap, right? And trade lower from there. targets could be set at that June 12th low. Like I said, June 12th low right now is my higher time frame draw. That would be my higher time frame draw of liquidity. But now now it depends. It's up to me to decide if I'm willing to risk. You know, is prices gonna retrace back inside this 15-minute fair value gap, or will it not? So it appears that we might not even retrace back inside this 15-minute fair value gap here, just based on how we could be closing. But we still have 20 seconds left, so I'm gonna like to see. So there is that. Let's see. I'll risk 240 here. Okay, so at 10, we instantly took out that 10 low, that 4-hour low. So I'm not gonna. I'm not gonna even chase this. So if it takes out June 12th low, it takes out June 12th low. It's just that's not something I'm gonna chase. Specific time. So if we can actually leave June 12th low intact here and retrace into that 15-minute fair value gap, that's where I would like to take a trade from. I'll take it at the discount of the range, and but like I said, if we take out June 12th low, then I might actually consider just closing the stream here for today, because there's really not anything else I want to see from prices after we take out June 12th low, because that's just us retracing back into a daily fair value gap. Yeah, that's retracing back inside. I don't see any lows I could target from there. So ES hasn't taken out its respective low yet, and let's see if NQ could actually retrace into this 15-minute fair value gap to take out June 12th low. And look at the daily time frame. As of right now, we are kind of disrespecting this daily fair value gap that we were within, and I want to see us trade into that June 12th low. But if there's no setup if there's no entry pattern to really set us up for that, then I'm not going to chase the move. And yeah, we are really close to that low of day, or that June 12th low. So it's looking like we are not going to get an entry to attack that low. So if we do end up taking it, I'll play like one chess game. I'll review I'm gonna review a plus setup, and then I'm gonna close the stream, because there's no point. So we just took that out. Alright, so there's no point of me taking anything here now. I don't have a reason to chase this move. And yeah, that's basically all I have for today. For the markets, at least, that was what I was anticipating. So even before we even took out previous week's low, so we were still up here. Like I said, I was anticipating for us to take out previous week's low. And I said that even coming at like Sunday's afternoon, which is good. Like I had the right thought in mind. It's just I didn't have an entry to actually attack that objective that I had, which is cool, completely fine. But now is when I am going to let's do one chess game, and then I'll go over a new slideshow that I created, and I'll probably will post it on my YouTube channel as well, so make sure to watch that. Alright, so here we go. I just realized I didn't have music playing this whole time. Wow. So I'm gonna delete this actually, and then see what we do from there. Okay, so back to the chess game. So if he takes here, I can take. My next move is probably going to be something like this and then this to take control of the center piece, the center here. He actually takes here, here, and then he takes here. That's not bad for him actually. Okay, I'm just in development here now. I'd rather just develop my pieces here actually, and next move will P here, and then castle this way. I actually appreciate that, because now I can do this and then here. Get a pretty strong position now. Connect these rooks. So, should have attacking that knight. If he takes here, then I take. Okay, and now he's attacking here. Now I just move up here. So I have this really strong, like almost like an umbrella. Like an umbrella pattern. Attacking that rook, he's x-raying my rook now. Move here. want to get my rook, to be honest, I want to get my bishop here, and then okay, so I go here, right? He takes, I go here, he takes, I take, he takes, and then I take, and he checks me there, and then I have to move back here. But if I just move up here, then I will be chilling. Yeah, I'll do that. I'll actually do that there. So I'm gonna move my bishop there, or actually, no, I think I have to move it here. Take that bishop. Okay. So I still have the umbrella, but instead of a pawn, I have a bishop. I'm gonna take control of this open file here now, and yeah, probably like to open something like that, do something like that. Take control of the open file. We can actually do this, and then I'll go here and do something like that. Here, here, so here and then here. Are you gonna move here? I would assume so. Yeah. That's when I do this. We actually training here actually helps me develop my king, because I wanna move up my king. Yeah, I actually want to move up my king. Yep. Now he's starting to move up his king as well. I feel like we might actually start fighting for these pieces. So I don't want him to go here. I have these squares blocked off, so he could go there. Red lights and then back. I'm protecting this square, but if I go here, he goes here, and then I go here, and then he goes here, and then he takes. Or actually, okay, so I go here, right? He goes here. I go here, and he goes here. I take, and then he takes, and then I move my bishop here. Okay, actually I think this is a better move to go here. Start eating his pawns, because I feel like this guy would move here. Yup. He can't take my bishop because this. So we still have a pretty long way left till we attack this this low. Okay, I'll do that. And I'll just continue to take his rook pieces here. you go here and I just take more. Well, he can't even actually do that. How am I doing? What you mean? What you mean? And now it's just a pawn walk basically. Here. He can't do anything. Unless he keeps his... Is he gonna trade this? Is he gonna trade this right here? That's cool. So now I'm gonna rotate here. So now he has to decide. He's lost. He's lost. Checkmate. Oh. Look at that. Look at that. So on ES, like I said, we're still continuing lower here on ES. So, and this black line right here is that original consolidation low, which is good to see because I want to see us attack that original consolidation. Don't really have any entry patterns on ES here. Would this even be a 1-on-1? It would be, but we already took out that 15-minute low, so there's no point. And it's not based off of the 30-minute or anything like that, so I'm not going to chase the move. Just got to be patient, and I'm going to go over my A+ setup. So what is my A+ setup? I'm sure if you guys have, you guys should have already watched my day trading strategy. I have everything on my YouTube channel, so I'll let you guys check that out there. But yeah, I'll let you guys check out everything there, but here's my example of an A+ setup. Okay, so here we have our high time frame draw of liquidity is this previous month's high. We created a 15-minute fair value gap, and we retraced back into it actually. So we've created this 15-minute fair value gap. We retraced back inside this 15-minute fair value gap. Notice how this 30-minute candle closed as well. So this 30-minute candle closure, we can anticipate for us to take out that 30-minute candle's high. And after we had this 15-minute bullish power of 3, you want to go on to the lower time frame to find an entry to attack that 15-minute high and the 30-minute high, and we have that higher time frame draw of liquidity still. So on the lower time frames, we actually create a 2-minute FEG here. We reprice into it, and then we take out 15-minute high, 30-minute high, and previous month's high. Notice how this this model right here is the same thing as this. We're retracing into a 15-minute fair value gap to attack previous month's high. On the understanding how fractal prices could be, we retrace into a 2-minute fair value gap to attack the 15-minute high and 30-minute high. That's the fractality of the markets. We actually we mark out that 11:45 open, and we are buying below the open, so we bought below, and then we take out that 15-minute high, 30-minute high. This to me is a A+ setup. This is everything that I would wish for an A+ setup. Everything that was given in this exact model here is basically what I was hoping to see here, but we didn't get that, and yeah, we just gotta live with that. So there's that, and yeah, we opened up at 10 o'clock. We immediately took out the low, so there's really no chasing it. I don't trade this first 30 minutes, so this right here is just really nothing to me, or it's not nothing to me, but I'm not gonna be trading that. And yeah, with that, I'm gonna be ending the live stream for today. I know I'm gonna ending it short, but my higher time frame objective has already been taken, and I have to get on with my day, right? So